Welcome back. Here with us on Closing Bell. Let's pull up those European markets again. And the cuts are deep. We're talking about almost 2.5% to 3%, depending on which index you look at. And the concern is obviously percolating across to Dow futures as well, which were down about 400 points last I checked. So it's a deep sea of red. Plenty of concern. Jonathan Schiessl is joining us to talk about the way forward. Jonathan, thank you so much for making time for this call. Now, obviously, this coronavirus second wave, perhaps it's something that the market didn't see coming with this ferocity. What's your sense? What could the next couple of weeks perhaps bring forward?
Yeah, good morning. Yeah, it's obviously markets are finally reacting. I think the signs have been there for some time. But clearly, I think from the rally we saw, the risk was always the reemergence of some sort of second wave. So particularly a lot of the sectors which, the cyclicals as such are taking an absolute hammering at the moment. And I guess, it's obviously corona, it's obviously uncertainty over the US election. It's a number of factors at play. And I guess there's a bit of profit taking coming in.
Jonathan, good afternoon. So would it be safe to assume that the markets may have made high for the year at the global equity markets, or do you think that can change after US elections?
I think it can change. I'm still reasonably bullish about the prospects for equities on a medium to longer term. But obviously, I think there had been some complacency in markets to the risks that were building. And so, I wouldn't rule out new highs in the year. I think a lot depends clearly on what happens in the States if we get a contested election. Obviously, the whole talk of some sort of vaccine for COVID as well obviously seems to be doing the rounds. There are some who clearly discount that idea, but others, seem to be talking seriously about that. So I think there is a possibility we could push back up, but certainly, in the next couple of weeks, whilst the US election and the sort of terrible news around COVID, particularly in Europe, peak, then yeah, it's going to be tough.
Okay. Jonathan, do you see perhaps a deeper correction coming through, and really what would the sort of the next triggers immediately be, and do you expect the volatility to continue right up till the point we know the result of the US election?
Yeah, so I think one thing is given is increased volatility. I think that's just something we're going to have to get used to over the next couple of months. I mean, clearly, the COVID situation and this emergence of this second wave is spooking markets. I think there was many in the markets who did believe we wouldn't see a proper circuit breaker or a major reshutting of economies in Europe or the States. I think some people are now thinking that might be a possibility. And if you did see another full lockdown, then clearly markets are not prepared for that, particularly some of the sectors that have rallied very hard from the prior lows. And I think that's where we're seeing some profit booking. But my view would be we're unlikely to see a full-on lockdown again. But who knows? But yes, with this uncertainty and volatility, equity markets probably will be more on the soft side for the next couple of weeks.
Okay, finally then, Jonathan, what about India? Because, we have been a bit resilient in face of really weak global markets. Could it be because, our cases have come down drastically, or is there something else which is driving our market?
So I think it's two things. I would totally agree with your latter point. I think obviously India seems to be, certainly the data seems to be looking pretty good at the moment with regards to the obviously COVID. And India seems to be handling it reasonably well. And obviously the economy seems to be getting on a steadier footing. So I think that certainly helps. I think the other factor is I think investors do want to start investing more back into emerging markets. Leadership of equity markets looks like it could be changing, which is not for certain yet, but obviously tech sector has led globally for some time. Obviously just pushing this COVID worries to one side in the very short term. I think definitely investors will be looking to increase their allocations into emerging markets, and particularly markets like India, going forward. So yes, I think India looks quite attractive, but we've hardly had any correction in India yet. So I think there is a possibility of a little bit of money in the short term, the very the very speculative money coming off the table in the short term.
Okay. All right, Jonathan, thank you for joining in today. I appreciate you taking out the time to make sense of what seems to be sort of a very clear panic right now in the markets, thanks to the rising COVID cases in Europe. Let's come back home then and look at some of the big numbers that we've seen so far in the day. Titan reported what appeared to be initially a miss, but then Mangalam explained to us why numbers are largely in line. Mangalam?
That's right. So Titan's second quarter, perhaps you could call it a largely in-line set of numbers, marked by a couple of one-offs, which is why, as a street, understood that the fact that there were a couple of one-offs, we did see the stock recovering a tad bit from the lows as well. And currently, it's around 4% of the lows. So let's run you through the numbers. Revenue, 4,318 crores, absolutely in line with our poll of 4,300 crores, of course, because the company had guided for a 98% recovery in the jewelry business. So most analysts factored that in. Now to the big miss came in on the EBITDA. It came in at 300 crores as against our poll of 360 crores. That's because of a one-off hedging loss of close to around 484 crores, against which the company had sold around 391 crores of loose gold as well. So that is a miss of close to around 90 odd crores. If you adjust for that, the EBITDA too is largely in line with expectations. So one would say, why is the net profit at 199 crores against our poll of 200 crores despite a big miss on the EBITDA? That's because the company's tax expense this time around was just 39 crores as against 139 crores in the previous quarter. Segments as well, they've been largely in line because of the second quarter update that the company had given. But more importantly, the fact that, these numbers were in line, there were no fresh negatives. The street likes that. All eyes will now be at 4 p.m. when the management will address the conference call. And out there, the outlook for the second half will be extremely important. If they utter the words, there would be growth in the third quarter, the street would like that. Okay,
Mangalam, thanks a lot for that. Prakash, Titan at 12.17.
So, Anuj, all said and done, we heard the comments from Mangalam, and now the management will also have to kind of give some sort of put some spotlight on the future. But there could be some softness in the stock because, the numbers aren't, as you were mentioning earlier, it's got nothing to do with that wow factor. The stock has run up. So I would be surprised if it loses about $100, $150. And the festive season commentary would probably, be the one that brings it back, brings the mojo back. So I would definitely recommend a buy on dips for Titan. There has been a contraction in certain promising segments which lead to decent margins and profitability. So they need to come back as well. So wait for a little bit of a softness to be slightly deeper and then buy into it.
Okay. All right, Prakash. We will then let you go on that note. Thanks very much for being with us today on Closing Bell. And on that note, we will take a quick break. On the other side, we get chatting with Rahul Sharma of JM Financial Services. There was a slightly cautious call in the market right now, going by technicals. So we get that conversation flowing. And then, of course, get you the insights from all the dealing rooms today, what the chatter has been like with this big cut coming in. And then there are earnings in focus tomorrow, Maruti and BPCL. We will get you prepped up. And, of course, tomorrow's trades coming up in the next couple of minutes.